Now, for more on Japan's impact on equities, we bring in Mark Grant, Managing Director of Southwest Securities. Mark has run capital markets at 4 investment banks, and his out-of-the-box newsletter is read in almost 50 countries by more than 5,000 financial institutions. And Mark, let me ask you first about your view of the Japanese response. Obviously, no one can control these natural disasters. There's nothing you can do about them, but your response, I'm guessing, is key in the Bank of Japan flooding the market with liquidity.
Yeah, the Bank of Japan has no choice. They have to flood the market with liquidity. That's certainly the right move. But the question is how much we really know about what's going on in Japan and the timeliness of the information. If these nuclear blasts, explosions in the nuclear plants get substantially worse, the market is going to be hurt, I think, a lot more than a lot of people realize.
Mark, at this point, as you say, I mean, the information is coming out, but we certainly don't have a full picture of what's going on completely in Japan or how it will impact things kind of longer term here. Is it wise to be making kind of investment decisions at this point based on what we know so far out of the news of Japan?
Well, to some extent, I'm with my friend Dennis Gartman. You two, Matt and Carol, you read my commentary every day. As you know, on March 9th, I said, begin bringing money back to the United States.
You did.
There's too much stuff going on in the world. There are too many problems, and it's getting to a point where we can't assess with any great accuracy where the financial markets and the worldwide financial markets are going at this point.
All right, Mark. Couple things we want to go through here because there's so much going on around the world, but let's focus a little bit more on Japan. You'd sent some notes this morning about potential stocks that could benefit and stocks that could suffer as a result of what we're seeing right here in Japan. Let's talk about the potential positives, and this includes your coal companies and natural gas companies. Talk to me a little bit about your reasoning here. I mean, some of it kind of makes sense, I guess.
Well, the coal companies will do better as the nuclear companies do worse. People will want to invest more in coal. They'll want to invest more in natural gas. I think one of the most interesting plays is going to be the American car makers. They're going to get a big positive from this, in my opinion, for one of two reasons. Either the engines for the, say, Toyota, which are made in Japan and shipped over, then the cars put together here. What if people can't deliver the engines and Toyota has to shut down for some period of time in the United States? Mm-hmm. Or think about this. What if people are concerned that the engines being delivered from Japan have some exposure to radioactivity and they just don't want to have them sitting in front of them? I think it could be a big plus for Ford and General Motors because of the situation in Japan.
I wonder about your take on the sort of Bastiat argument, Mark, that some people are saying because of the destruction, it'll be a boost to the economy, that they get to rebuild, and you can buy all those companies that are going to take part in the rebuilding of Japan. Other people are saying, you know, if you pay to fix the broken window, you're just taking money out of the shoemaker's till that you would have, paid for shoes. You know, the old economic argument. Where do you stand on that?
I stand on the fact that it depends where you are on the timeline, but certainly in the short run, investing in the companies that are going to fix or do something with the infrastructure of Japan 2, 3, 4 years out is not going to make any sense. The timeline is just too far out. I think you have to be very cautious about any investments in Japan. And moreover, even the emerging markets now with what's going on in the Middle East, with the disarray in the European Union, then you have Japan. You just have too many major factors right now, which has caused me to reach the conclusion, bring the money back home.
Mark, in terms of maybe holding back on any company associated with nuclear power, I mean, do you really believe that this will be a lasting impact? I mean, that this debate between nuclear power kind of goes on, ebbs and flows, if you will. But, you know, I look at those emerging markets, China and so on. I mean, there's such demand for power. Will they really have any other choice but to pursue nuclear avenue?
No, I think the nuclear situation goes on, but I think you're going to have a 6 months to a year hiatus while the experts in this look at very carefully what they need to do and what new steps they need to put in place and what they can do to improve the infrastructure so if there's a tsunami, an earthquake, or something in different parts of the world, that the plant is in much better shape than the ones in Japan, which obviously are not ready for what's taken place.
Isn't the visibility, though, right now pretty low, Mark? I mean, if you're seeing U.S. military that's 100 miles off the coast bugging out because they have too much radiation, people in office buildings in Japan being called back, countries bringing citizens back from the entire country because they're concerned about radiation, I mean, the risks would be too great to even go forward with building new plants or operating the ones that are up.
Certainly for any time now. As a matter of fact, Matt, you make a great point. The Japanese government's only giving a certain amount of information. To me, it's a very telling sign that the U.S. military is backing up from Japan. It's a very telling sign that they're telling people within a 12 and then 18-mile radius to stay indoors. I suspect that the radiation fallout is much worse than we've been told at this point. And that's one of the reasons that I think we may have another down leg in the equity markets across the world as this comes out.
Mark, in your note this morning, you mentioned how you had just heard from the head of a central bank in the Middle East that was very concerned about where to put their money. You gave him his opinion. Again, you talked earlier about bringing back money home here to the United States. What did you tell him? Did you tell him that the U.S. is the place to invest right now?
That's exactly what I told him. He's a great friend of mine and head of one of the central banks in the Middle East. I said, this is not the time to be in emerging markets. I said, with what's going on in Japan, which is where he'd had a portion of his money, it's time to bring it out of there. Europe is in political disarray. I said, this is a moment in time where money should be coming back to the United States, where money should be invested, and mostly in fixed income in the United States. And this is a time for preservation of capital until we can see what's going on. I don't like investing in things when they're either up for grabs politically or up for grabs environmentally. And when I counter those times after my 37 years on Wall Street, I want to bring the money back home. Grants rules 1 to 10 or preservation of capital, and that's what I strongly believe in.
So you like then U.S. bonds? I'm assuming you like the dollar on that kind of strategy. What about gold?
I think gold is overblown because of where it's gotten. I think gold in a normal period of time might be a safe haven, but I think right now the best safe haven is probably treasuries or highly rated corporate bonds with plenty of cash, with some spread to treasuries. I want to be in a capital preservation mode at this point.
All right, we got to leave it there. Mark, thank you so much.